In this video, we're going to walk through a problem for recording journal entries and posting them to a cost flow diagram in a manufacturing environment. We'll record purchases of material, issuing material for production, direct labor cost, allocation of overhead, and closing out under or over applied manufacturing overhead. We're told that the following transactions occurred in January in the Danguri cabinetry, a furniture manufacturing market that uses job order costing. We're told that they purchased $53,700 of materials on account. We will debit materials inventory, and we see that showing up in the raw materials inventory T account on the left-hand side, and of course credit accounts payable. Transaction 2, we issue $1,500 in supplies from materials inventory to the production department. So we need $1,500 to come out of raw materials inventory and into manufacturing overhead. So we debit manufacturing overhead by $1,900. Again, manufacturing overhead control because we're using a control account. And of course, that needs to come out of raw materials inventory. Transaction 3, we're purchasing or paying for the materials that we purchased in item number 1. So we simply debit accounts payable for $53,700 and credit cash for $53,700. Transaction 4, we issue $25,500 in direct materials to the production department. So issued to the production department, we have an increase in work in process of $25,500, a debit, and that's recorded on the left-hand side of the T account for work in process. And it's going to be a credit to raw materials inventory, and that shows up as a credit on the right-hand side of the raw materials inventory T account or cost flow diagram as well. Number 5, we're told that we incurred wages of cost of $42,000, which were debited to payroll expense. So debit payroll expense. And we're going to consider or use payroll expense as just a temporary account where we're going to park payroll-related costs until we can allocate them to work in process or administrative side of our business. Of this amount, $13,500 was withheld for payroll taxes, so we need to record that as payroll taxes payable. And the remaining $28,500, we are actually writing checks and paying cash to our employees. Number 6, we're recognizing $8,000 in fringe benefit costs, so we will debit payroll expense of $8,000, and we're told that we are going to credit fringe benefits payable for $8,000. In 7, we are now going to analyze our payroll account, which has a $50,000 balance, and we're going to allocate it to 60% is direct labor and 30% indirect labor and 10% administrative costs. So we'll take that total $50,000 and multiply it by 60%, and we're going to allocate that to direct labor, and we're going to keep track of that separately for allocating our manufacturing overhead later. And we had 30% of the $50,000 or $15,000 gets debited to manufacturing overhead control. And again, notice both of those are taking place on the left-hand side of T account. And if we had a T account for selling and admin costs, we would debit it for $5,000. And with the sum of those journal entries, we are closing out that temporary account for payroll. So we've allocated out all of our payroll costs for the period. In transaction number 8, we're told that we paid $5,100 for utilities, power, and maintenance for the manufacturing plant. So that's a debit to manufacturing overhead control. And again, notice it's posted to the left-hand side of that T account. And we will credit accounts payable for the $5,100 as well. In number 9, we're recording depreciation expense of $17,000 in manufacturing plant property and equipment. And recall, typically our depreciation expense journal entry involves a debit to depreciation expense and a credit to accumulated depreciation. If this was depreciation expense for selling and admin equipment, that would be the case. But since this is factory equipment, that depreciation expense becomes part of manufacturing overhead. So we debit manufacturing overhead control for $17,000 And like normal, we credit accumulated depreciation for $17,000. In number 10, we are told that we are going to apply manufacturing overhead on the basis of 120% of our direct labor cost. And our direct labor cost was $30,000, so 30,000 times 1.2 will give us our $36,000 debit to applied manufacturing overhead, which of course increases work in process, and we need to credit manufacturing overhead applied. In number 11, we're told that we're going to allocate any over or under applied overhead, and we're going to do it 60% to cost of goods sold and 40% to finished goods. So we can total up our manufacturing overhead control, which totals to $39,000. Our applied manufacturing overhead is $36,000, so we have under applied manufacturing overhead, which means work in process is too low, finished goods is too low, and cost of goods sold is too low as well. To close this out, we need a $6,000, or rather a $3,000 debit to manufacturing overhead applied, and notice that will indeed zero out our manufacturing overhead applied and manufacturing overhead control, and we're going to need to then allocate that to cost of goods sold and manufacturing overhead. So 60% of that is going to cost of goods sold, and then 40% of it to finished goods. Now, we're actually not done with our journal entries related to manufacturing overhead, because we still need to close out our manufacturing overhead control and our manufacturing overhead applied accounts. Our applied account has a credit balance of $39,000, and to zero that out, we need to credit manufacturing overhead applied by debit manufacturing overhead applied by $39,000. And of course, manufacturing overhead control has a $39,000 debit balance, and to zero it out, we're going to need to credit manufacturing overhead control for $39,000.